Today is Tuesday, August the 15th, and this is what's happening in the condo market this week. Thanks for checking out this video once again. And if you like these videos, if you like these podcasts that you've been getting from me, if you can go ahead and share it, if you can leave a review on iTunes, if you can hit send and send it to somebody else that you know, or share on Facebook or like on Facebook, that would be great. It really helps to get the word out about these shows and these videos and these podcasts. Helps other people get access to the information as well. So as we jump into the first article for this week, it is from BNN. It's an interview, a video interview and an article with David Rosenberg. He's an economist, senior chief economist, and he is talking, the headline says, Toronto housing slowdown is good for the economy. So this is sort of a contrarian sort of a headline and catched a lot of people maybe by surprise this week. But the point is valid, and it's something that we've talked about on this show a lot, is this idea that the slowdown that we're seeing in the low-rise housing market, again, condo market is very different. Condo market hasn't really changed much at all. It's still at all-time highs, and prices are still rising very rapidly, and supply is still very low in the condo market. But in the low-rise housing market, it's obviously slowed down a lot over the past few months, and the news here again, and what we've been hitting home on, is it's a returning to normal. We're going back to sort of a more normal place to be, and that's a good thing. And this is again something that Rosenberg is also hitting on. Where are we here? Is some of the quotes from the article. Again, just basically talking about how it is coming back to more of a normal level, and the unsustainable rises were not a good thing, and we should be happy that things are in fact going down to what is more sustainable market. And he's making it very clear he doesn't think that the market is crashing, is spiraling, is going to go down with any significance. It's just a market that's correcting itself after having gone up a lot. It's now coming down. The next article that I wanted to bring to your attention is, you might have caught this, it was actually from a couple weeks back, but some statistics came out about on the mortgage arrears, so people who are late on their mortgage payments in Ontario, and they're basically at the lowest levels. Mortgage arrears, people late on their payments, are at the lowest levels they've been in 27 years. 27 years. So again, this is another indicator of the health and the strength of the market, the fundamental structure to the market. Are we in a bubble or not? This is one of the things that you should always look at, is, are people late on their payments? Is there, are we witnessing anything like what we saw in the U.S. in the run-up to their major housing crash, where mortgage delinquency rates soared? And we're not. In fact, we're seeing the opposite. Mortgage arrears are at 27-year lows. This is the lowest, of all the years they have on record of tracking this. This is the lowest number they've ever seen. The number is a tenth of 0.11%. So roughly a tenth of a percent. So 1 out of 1,000 mortgage holders in Ontario are behind on their mortgage payments. 1 out of 1,000. So if you look at your neighborhood, if there's 1,000 homes in your neighborhood, one person maybe is in arrears. Again, at the peak of the U.S. crash, in some of these really terrible areas and terrible neighborhoods where things were going down really quickly, that number was, it was into double digits, 10, 15, 20%. This is a tiny, tiny fraction of that sort of a number, and all indications are it's been flat. It's been flat for a number of years, so that is good news, and again, speaks to the strength of our mortgage market in Ontario. Next article, new condos supply falls to 15-year low. This is from the New and Homes blog. Again, this is from Urbanation data for the second quarter, which they put out in the past week or two. And this is another headline I want to make sure you see and understand. This 15-year low. So out of, where are we here? Out of 100 110,000, where is it here? Sorry, bear with me. 110,000 active units in the Greater Toronto Area. 94% of them are sold, leaving an unsold inventory of just 6,700 homes. This is the lowest new condo supply there has been in 15 years and equals to 2 months of supply. So this is, again, the lowest level in 15 years. Inventory supply levels are at incredible low point for condos in the GTA. A big reason for that, on the one hand, is that there has been such a high volume of sales in the past 12 months, roughly around, I think, 35,000 units or so sold in the past 12 months, which is higher than the typical average of around 25,000 units. So sales are up, prices are obviously up. New projects are coming out, but they can't keep up with the demand. New projects come out, they sell out right away. So if you're a buyer out there looking to buy something right now, as I talk to buyers every single day, it's very hard. There's not a lot of choices to choose from. A year, 2 years ago, if you came to me and said, Andrew, I'm looking for a great condo investment, what have you got for me? I'd easily lay out to you 3, 4, 5 good options that you could choose from immediately. Right now, that number is as of today, recording this podcast, is basically zero. We are waiting for new product to come onto the market. That is a good opportunity for investors to get into. There's some great stuff coming this fall, but right now there's very slim pickings, especially in the downtown core. So that is the condo market right now. The next article: buyer who walked away from real estate deal ordered to pay $360,000. Would-be buyer ordered to pay the difference after house ultimately sells for 28% less. So this is from out in Surrey, BC. Somebody entered into a contract to purchase a property for $1.26 million. This was a year ago at the height of their market, before their foreign buyer tax came in. The foreign buyer tax came in. Market slowed down significantly. The buyer got scared. The buyer backed out of the deal. They did not close on the deal. So the sellers ended up putting the property back on the market and selling it for $360,000 less than that price many months later. So now the went to court. Obviously, they sued and they have to pay the difference. So this is a very important learning point for every real estate investor, anybody involved with real estate in Canada, is to understand this concept that a contract is a contract. If you enter into a contract to purchase, you must follow through on that. There's no walking away. A lot of people have this misconception that, oh, you can just keep my deposit and I'll just walk away and we'll call it even, shake on it, see you later. That's not how it works. A contract is a contract. You are obligated to pay that price. If that price is not paid by you, then the seller is open to sell it to someone else, and you, the original buyer, have to pay damages. You have to make them whole. You have to make them come up to the amount that they would have received if you had closed on your deal. So that's something a lot of people don't understand and seem to take for granted. This buyer obviously got some very bad advice, and they decided to walk away from this. Interesting enough, now that the market in BC has rebounded, if they had just stayed in that deal and closed on it, and then just simply sold the property today, they probably would have, been much, much better off. They would maybe they wouldn't have come up all the way to the price they paid, but they certainly wouldn't be out $360,000. It might be, I don't know what the number is. We can look into it, but I'm sure it'd be much, much less than $360,000 as the market has rebounded. So they got cold feet. They thought the market was going to tank. The market didn't tank. The market slowed down for a little bit, and now the market is flying again. And finally, this tying into the articles about the mortgage arrears and walking away from your contract. Another difference between Canada and the U.S., which is important to understand, is this idea of non-recourse versus recourse mortgages. So a big problem in the U.S. with the crash there. They had these non-recourse mortgages where a lot of buyers were simply walking away from their houses. They stopped making mortgage payments, mortgage arrears. We talked about that. And they just simply walked away and said, okay, bank, you can have the place. It's yours. I'm out of here kind of thing. In a lot of the states in the U.S., Florida and others, you could do that. pretty much everywhere in Canada with the exception of Alberta. And I'll include a link to this article here, which is from a couple years back, but it's great in explaining recourse versus non-recourse mortgages, how they work, how you can do it in Alberta under certain conditions, but you can't do it obviously in Ontario. So you can't simply walk away from your mortgage. It's another reason why our market is fundamentally strong, why our lending system is fundamentally different from what's gone on in the U.S., and why our market is not going to crash in the way that the U.S. market ever did. It's just simply not going to happen. And those people who think that, you know, this is our time, just like it was in the U.S., are completely and totally misinformed. Okay, I hope you enjoyed this video, and check out the links that I sent you here. And until next time, have a great week and happy investing.